I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead-zinc-silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineer gold mine in the Atlan District of Northwestern BC. Check us out at blindcreekresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. Welcome back to the show, Tim.
Jim, as always, thanks for having me.
How do we explain this crazy stock market right now?
Well, it's crazy. I think you explained it.
Okay, show's over. Thanks a lot for talking with us.
No, let me frame it just a little bit. I've been talking in my letter for basically, I don't know, for several months, 6 months or so. I said that we're facing, well, going into the summer, I started talking about it. I said that we were facing, technically, either a 1927 or a 1929 scenario. And what I meant by that was that the technical juncture is either going to give us a green light to where the bubble, I think we've talked about this on the air here, where the bubble is either going to continue to expand or we're ultimately going to cap it. And, you know, the top is out there. I mean, nothing lasts forever, even this bubble, you know. The question at this technical juncture is this the technical juncture that caps it? And, you know, things take time and sometimes they take much longer than you imagine, but we are at an important technical juncture with the market. Now, that said, when you look at the CAC, the DAX, the FTSE, you know, there's evidence there that we have seen what I term a seasonal cycle top, a top. I mean, and they happen. I'm not looking at the charts, but I want to say it was May, June that those markets top. And we've since seen the weakness in association with that cycle top, and then a little bit of a bounce has occurred more recently. But still, the evidence is that top is in place. A cycle of that degree, it's about a year in duration, that it's in place. When you look at the industrials, the transports, the U.S. markets, you know, we know that everything ebb and flows together, you know, pretty much. You know, it's not exact, but typically you get a cycle low in, you know, one market, you get a cycle low in the next market in fairly close order, and same thing with the top. Well, with the U.S. markets, they have been very resistant to those, to that seasonal cycle degree top this summer. And so they just haven't given in to those pressures, which is somewhat suspicious, but it hasn't happened. We had a Dow theory non-confirmation working between the industrials and the transports, and that has recently been blown out in association with this last push up since the August low. So that's gone. Does it change the fact that we're still looking for this top, that it's still a bubble, that the seasonal cycle top is still out there? No, it doesn't. But it does kick the can down the road a little bit technically. When you look at another scary chart, when you look at the Tel Aviv, and I mean, this is not something that, you know, I'm making up or justifying a position. I mean, I challenge anyone, just go do it. Take a long-term chart of any of these markets, and I guess the subjective part, or the part that people may have a problem with, is identifying, you know, the degree of the cycle, obviously. But if you just basically overlay the chart, you see that they all ebb and flow together. Well, looking at the Tel Aviv, you know, it made its 4-year cycle low, in I'm not looking at the chart, but in close proximity with the industrials and the S&P, which in the case of the industrials, it was in August of 15. In the S&P, it was in early 16. So that pattern of the cycles are still the same, but in the case of the Tel Aviv, there's evidence of the 4-year top already. And when you look at some of the other, subsectors within the U.S., there's starting to be evidence of that top. But then like I said, when we look at the industrials and the transports themselves, the latest non-confirmation is blown out, the can's kicked down the road, more of the same. The bubble stretches on. Does it change anything? Only in the interim. How long does it take to get another setup, and then does the setup stick? I don't know. It is what it is. Not making excuses. It is what it is. But what I think is key, and I've talked about, I said in the last interview that we did here, that one of the most important letters I've done in a while, and it was the September letter, and it has to do with commodities. And I've said that I think commodities are a canary in the coal mine, and it's on track in spite of this advance. It's explained in that letter. You can see it perfectly. It's on track with, I think, the 29 scenario. It's not done yet. But as we move through this technical window with commodities and equities, it's going to confirm one way or another. Either the 29 scenario is going to be blown up, and then we're going to have a technical green light for things to expand even further, if that can be imagined, or the bubble's going to hit a wall, and it's going to be the 29 scenario, and it all comes unraveled. And that is explained, like I said, there's no way I could do it justice. There's charts and stuff in the letter, and I'm not just saying that, but I mean, it's a picture's worth 1,000 words. And I think still we face that scenario. We're at that technical juncture, and I'm not saying it's a technical juncture. It's going to conclude itself in a week or two. We're in a technical juncture over the course of the next few months to where I think this is going to come to a head one way or the other.
We'll have more with Tim Cyclesman Wood right after the break.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. A work program is planned for our Finland property that contains diamond-bearing kimberlite. Arctic Star trades on the TSX Venture Exchange, symbol ADD, and the Frankfurt Exchange, symbol 82A1. Please visit our website at arcticstar.ca or call us at 604-689-1799.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, when it comes to crude, I think it's been surprisingly strong, still above $50 a barrel right now. And this is supposed to be after the so-called driving season, or did the driving season start late? And have the hurricanes have any impact on the price of crude?
Well, the hurricanes had an impact on the price of gasoline. I don't know, but, they're back to basically the pre-hurricane levels. And, that's always pretty much the case. You get a spike anytime you get a hurricane in the Gulf. But no, crude oil has been, surprisingly strong in that it is above 50, but still nothing has changed there structurally, technically. The commodity complex, is still looks like to me that, it's in the process of that slow rollover that should be peaking. We saw the same thing with gold. We had a much stronger than expected rally out of the, I said that it would be counter trend. I still think that it was counter trend. We had a much stronger than expected rally out of the July low in gold. And, then we had another little minor low in August and it continued. And yes, it was stronger than expected, but counter trend. And gold has backed off a good bit since that early September high. I think that crude oil and the rest of the commodity complex is going to follow that. And when you look at the weight of the evidence presented by the CRB index in and of itself, it tells us, it tips the scales toward this all being a counter trend rally in the commodity complex and that lower prices are still ahead. Could that change? Yes. Has it changed as of now? No. So I stick to, to that conclusion that crude oil and the general commodity complex should be at or near top. And in the case of gold, I think we've probably seen it.
How can people sell their shares and not be part of a general panic so prices stay decent and you get some good cash value out of it?
Well, I guess the thing is that if you sell and you're not, are you talking about gold or are you talking about equities in general?
I'm talking about equities in general.
Well, I mean, if there's not a panic going on, obviously, you get, market price, and right now we're at a high. So, I'm not sure what you're asking or if I'm answering the question, but, the danger to me with this market is that once the panic, and I don't mean this to sound the wrong way, but once the panic does start, number one, initially people aren't going to believe it. Number two, by the time they do believe it, it's going to be too late, because I think that it's going to be like a stampede. In the interim, it is what it is. It's quiet now. I wouldn't want any exposure personally to this market at all from an equity perspective. I just wouldn't want any part of it. And that said, when you look at it, I've got charts. As a matter of fact, they are on my website. If you go to cyclesman.com and scroll down to the bottom of, click on charts and quotes and then scroll down to the very bottom of the page, there is a chart. It's titled, I'm looking at, it's called the S&P 500 volume characteristics. And you can see how all throughout this entire advance, out of the 2009 low and even the 2016, 15, 16 4-year cycle low, volume has continued to just dry up. And that's just not healthy. Does it negate the fact that price is up? No, but it tells us the environment that we're in my eyes, and that, it's just not a healthy sign.
We'll have more with Tim Wood right after this.
Glance Technologies owns and operates Glance Pay, a disruptive mobile payment technology now live in 16 cities in Canada and about to launch in the U.S. With revenues up 664% in the last quarter, Glance Technologies has the potential to be a worldwide leader in an industry projected to grow to $1.3 trillion in 3 years. Glance Technologies stock symbols are GLNFF in the U.S. and GET in Canada. Find out more at glancepay.com.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're chatting with Tim Cyclesman Wood. Tim, a U.S. federal government spokesperson said, quoting them, "Hurricanes are good for the economy." Now, is that one of the silliest statements you've ever heard?
Well, I think it's one of the silliest statements I ever heard, but I think there's some truth to that. If there's anything truthful comes out of their mouth, as brutal a statement as that is, obviously I think there is some truth to it, but I've seen it firsthand, actually. I live in a hurricane area that, is prone to hurricanes, and, after a hurricane, business is good, things boom, housing prices soar, and you bet, as crazy as it sounds, it has historically been good in the area that I live. I've seen it a couple of times, and so there's a basis in that statement, as crazy as it sounds, yes.
What about the loss of productivity? People aren't working, they're in emergency shelters.
I guess that's obviously a factor, but from my observation, the increase in obviously the sales of building materials, the complete loss that, from the flooding. I mean, people have to buy all new furniture, and they have to, their house has to be repaired, and so on and so forth. So I think the offset is that obviously a disaster like that is profitable.
Right. Now, Houston didn't have an evacuation, so a lot of vehicles, perhaps up to 800,000, have been either severely damaged or destroyed. Whereas in Florida, where you had an evacuation, no vehicles were left behind to see a big hit to either the insurance industry or to the personal pocketbook. Was it a good move in Florida's part then to get people out of the way rather than Houston stay and wait it out?
Well, living in a hurricane, let me answer it this way. I don't know. I guess on a personal level, that's kind of an individual decision. But I can say this about hurricanes, living where I live. If you live on the water where the storm surge is going to get you, you're an idiot to stay there, because I've seen it. It looked like pictures after Ivan in this area in 2004. It literally looked like scenes from World War II along the beach. It destroyed it to the point that you lost your landmarks. I mean, I was down there one evening driving around and I missed my turn. There was no power, and the landmark was lost. So it was complete and utter destruction. So if you live where the storm surge can get you, you're a moron to stay there. But living, just a few miles north, I wouldn't leave personally. I would not subject myself to getting out in the traffic, trying to get fuel. Where are you going to go? Where are you going to stay? The congestion. No. So my thinking is I'd rather be in Houston with my house flooded than, on the road stuck somewhere, out of gas on the side of the road or no place, I mean, that's just my personal choice. And, so I would not personally leave.
In areas where homes and businesses have been devastated, if they rebuild, should they be legislated to build buildings that are resistant to storm action like hurricanes? Or should they just build the old traditional kind of house where the roof easily blows off?
Well, if you live, I don't know. I mean, I'm not one to think that the government needs to regulate anything more than they already do. I'm kind of a less government kind of guy, but, one analogy that I see it all the time because I drive by it, but there were houses that, like I said, referring back to the Hurricane Ivan in this area, that lost shingles on the roofs and that sort of thing. And, I'm talking a few miles inland. There was no real structural damage. I mean, it just didn't wipe out the house like a hurricane hit it or like the storm surge hit it on the beach. But, they lost a few shingles and that sort of thing. And that was pretty much it. Well, you can't prevent those kinds of things. I mean, it's not like it's probably going to take the roof off the house anyway, living inland. And my point is, I drive by an old barn that has been here for probably 100 years. And that old barn has been through many a hurricane and storm, and it's still standing. And so I don't know if I'm answering the question or not, but my thinking is that, I think metal roofs are a good idea in these areas, because what I saw from, again, Ivan, was that the shingles get lifted, the shingles are ripped off, they're just little asphalt, wind gets under them, they rip them off, and then you get water in the house and water damage from the rain. And, that is preventable to some degree, or to a large degree, with metal roofs. So sure, that's a good idea. But as far as, over legislation of, you gotta do this and gotta do this, and no, I disagree with that.
Yeah. Well, my friends in Miami were having lunch with me here in Vancouver, and we're watching the news in the restaurant about the tornadoes hitting in Oklahoma, and they said, well, why don't you build tornado-proof homes? And they said, well, you can't do it. We don't have the technology. My friends from Miami laughed and said, we have 1 foot thick concrete walls and steel shutters on our house. We've been hit by severe storms and we're perfectly fine. We just lose, stuff in the garden. Yes, you can build, to withstand these things. It's just a matter of style.
Yeah. And it's also a matter of, do you force people to build like that? I mean, look, if you're in a hurricane prone area, you take that risk by living there. But do you mandate that everyone build a concrete bunker type house? I mean, yeah, those are cool, nice to have, but should an entity force you to do that? That's what I have a problem with. No. I mean, if you choose to, great.
But they also get government bailouts, and that's the taxpayer subsidizing them. Why didn't you build a stronger home? Why do I have to pay you to build another home when you could have built a stronger one in the first place?
Well, and why do they get the government subsidy bailouts? You know, that's another story. You know, I remember, to digress, and I read the story. I actually read the story, and it's been 20 years since I read it, but you bring up a memory. And Davy Crockett was, a senator, I think it was, a congressman, whatever. And, there was this fire, I don't even remember where it was. It's been so long, I don't even remember what it was, but it was this fire, and it wiped out, you know, vast, you know, areas of the town. And people were wanting the government to come to their aid to you know, do something for these people because of their loss. Well, I understand that. I get that. But Davy Crockett's, his position was, no. If you wanna do a charitable act, then let's pass the hat. But it's not the government's position to bail you out. And I agree with that statement. You know, it's sad that the houses in Houston are lost. But you know what? It's on you if you didn't have the flood insurance. Now that sounds cruel, but damn, it's the fact.
And also, if you can't get, also I was going to say too.
So if you chose not to get, I mean, accept your own responsibility. I mean, the responsibility for your own actions. Why does the government have to bail you out?
Tim, always fascinating to chat with you.
That may not be the answer you wanted, but I mean, that's my opinion.
Hey, I don't look for particular answers. I just ask the questions. It's up to you to give the answers.
But, all right. Anyway, didn't mean to digress on that.
Well, but at least, you know, you've been in ground zero before, so you know what it's like. And
absolutely.
So you can give an intelligent discussion about it.
Well,
here I am in
knows
Vancouver.
What it's like. You accept the risk of living in the area, and either you fully accept the risk or you don't. And you know, it's on you. I mean, why is it any different to live in a hurricane-ridden area and not have flood insurance or whatever, or you know, have a house of proper construction on your own accord, than it is to get in your vehicle and drive down the road without insurance and crash your car and end up, you know, being out the expense of the car plus the expense of being sued and for damages. And I mean, why is it any different? It's the same thing.
Tim, thanks again.
Thank you.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. If you have any questions for our show or our guests, you can send them to info@housestreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of House Street Media Incorporated.